Okay, it's time now for another look at the day's business news with Cole Stangler. And Cole, we're starting with a major new commitment from Facebook.
Right, Thomas. CEO Mark Zuckerberg saying he understands the company may have to pay more in taxes. It's according to a speech he's set to give Saturday at the Munich Security Conference. Also pledged his firm's support behind an ongoing effort to rewrite global tax rules currently overseen by the OECD. According to an excerpt of that talk, the Facebook boss expected to say, quote, "We want the OECD process to succeed so that we have a stable and reliable system going forward, and we accept that it may mean we have to pay more in taxes and pay it in different places under a new framework." Comes amid, of course, growing criticism that tech firms are not paying their fair share, especially in the European Union. Frustration that Zuckerberg says he understands, according to the speech. Meanwhile, here in France, automaker Renault has reported its first annual loss in a decade, driven by company sales falling 3.3% last year compared to 2018. Interim CEO Clotilde Delbos said this year's outlook isn't a whole lot better, with new emissions regulations, falling demand in China, and the coronavirus outbreak all weighing on the firm. She also announced a plan to cut at least 2 billion euros in expenses, suggesting that layoffs could be on the table.
Alors, nous n'avons aucun tabou.
We have no taboos. We're not ruling anything out. I think that given the current world market situation, given that we may have had a bit too much capacity for higher volume visions than what we have today, anything could be on the table, whether that's worldwide or here in France.
Que ce soit dans le monde ou en France.
Let's turn now to Friday's trading action. Wall Street with some very slight losses here as fears over the coronavirus continue to nag at investors. As you can see here, the Dow Jones down around 1/3%. S&P and the NASDAQ, meanwhile, with some very slight losses under the flat line. Meanwhile, some slight losses on the major European indices earlier in the day. The FTSE closing out Friday down 0.6%. The DAX just around even, while the CAC 40 here in Paris lost around 0.4%. Renault shares in particular down 0.9%, hitting a 52-week low. Now, European investors took in some other less than encouraging figures on Friday. Growth across the Eurozone slumped to just 0.1% in the final quarter of 2019, while growth in Germany's export-oriented economy has fallen to zero. Catherine Vriet reports on the slowdown.
It's Europe's largest economy, but falling exports and a manufacturing slump are taking their toll, as Germany posts zero growth in the final quarter of 2019. Overall, its economy grew just 0.6% for the whole year, its worst annual performance since 2013. Angela Merkel's government has so far resisted calls to implement a fiscal stimulus plan to jumpstart the economy. Part of the drag, major changes in the auto industry, where companies face disruption from an expensive shift to producing electric cars. Germany's problems also spell trouble for the Eurozone, which posted only 0.1% growth in the fourth quarter, making it the bloc's lowest rate of expansion in 7 years.
The outlook for Europe's economy is for stable, albeit subdued growth over the coming 2 years. We will still face significant policy uncertainty, which casts a shadow over manufacturing in particular.
Drags on the Eurozone's growth remain in the form of trade conflicts and the fallout from Brexit, as well as any disruptions to global supply chains caused by the coronavirus. But investors seem relatively unconcerned by the weak data, confident European central banks will step in to ease monetary policy if the economy falls into a deeper rut.
Next up, one of the world's oldest banks is changing its name. 293 years after its founding, the Royal Bank of Scotland is rebranding as NatWest, seen as part of an overhaul to improve the firm's image, which took a big hit in the financial crisis after RBS was saved by a government bailout. The lender also says it's stepping up efforts to fight climate change, with its CEO promising to phase out coal financing by 2030.
So what we want to do is be part of helping the UK transition to a low-carbon economy. We have very strong policies in terms of our lending today, so only 0.3% of our balance sheet is lent to coal-based industries. And what we will do is, we've said over time, we will withdraw that lending, but what we want to do is work with our customers on transition plans.
Next up, to the north of France, where workers are reacting to reports of rail giant Alstom preparing to buy up the rail division of Canadian firm Bombardier. Together, the firms employ over 3,000 people in the region and are said to be in, quote, advanced talks of a potential deal. Alison Sargent explains why and what it could mean.
It's a purchase that could make Alstom the world's clear number 2 in railway equipment. The French train maker is in talks to buy the rail division of Canadian manufacturer Bombardier. Employees at this factory in northern France have mixed feelings about a potential buyout.
It's easy to buy a group or a rail division, but then what happens? And it's not just us. Don't forget, we also work with subcontractors.
We know that Bombardier has been having financial problems, so I think having Alstom's support could make things easier.
Combined, the two companies employ over 3,000 people in northern France, and unions warn that a merger would inevitably lead to loss of jobs. Bombardier, for its part, is over 8 billion euros in debt after investing huge sums to develop new airplanes. The company has been offloading its assets. Earlier this week, Bombardier sold its stake in A220 planes to Airbus and the Quebec government. And now Alstom is reportedly offering some 7 billion euros for its rail division.
The benefit for Alstom is to form a rail industry giant, which would generate about 15 billion euros, and which would allow them to share the costs of research and development and commercialization, and to keep up with their rivals.
Alstom and other manufacturers have been fighting to counter competition from Chinese industry leader CRRC Corps. Alstom already tried to join forces with Germany's Siemens, but the EU blocked the merger last year over antitrust concerns.
And finally, Tesla has begun clearing forest in Germany for its massive new European gigafactory. The electric car maker is facing some hurdles. After environmentalists raised concerns, Tesla is now preparing to relocate wildlife from the area, including forest ants, reptiles, and bats. That's trickier than it might sound, especially for the bats, which are set to awake from hibernation and begin mating in March. Conservation groups say the bats should be moved before then to be disturbed as little as possible. So, Thomas, a race against time, you might say. That plan is set to open in 2021.
Okay, Cole Stangler with the latest business news. Thank you very much.